Iveco and Nikola Motors are officially parting ways. At least that's what it seems like on the surface. Nikola just announced its first quarter 2023 results, which came in on average in line with expectations for both revenue and profit. But unfortunately, that was not the biggest news that Nikola announced this week. The more bigger development revolves around Iveco having bought out Nikola's entire stake in the European joint venture. Now, for those of you that might be living under a rock, Iveco has been working with Nikola for around 4 years now, since 2019. That's when Iveco signed a joint agreement with Nikola for Nikola to develop the electric powertrain in an Iveco S-Way chassis. That is obviously why Nikola has been so quick to market and, generally speaking, one of the first movers in the battery electric and fuel cell electric commercialization space. Through the joint venture, Iveco and Nikola also commissioned a debunked and decommissioned facility in Ulm, Germany, retooled it, and allowed it to manufacture European spec battery electric trucks. And say whatever you want about the businesses, from a technical standpoint, this partnership has worked extremely well. So it's very surprising to see why this new joint venture agreement might be happening. In this video, I want to explain and break down the underlying reasons for why this new partnership is forming, what it means for Iveco, Nikola Motors, and some of the investors in these businesses, as well as understanding where the fuel cell and electric trucks in Europe actually fall. And surprise, surprise, a lot of these reasons might have to do something with cash. But as usual, guys, before we get into it, make sure to drop me a thumbs up and hit the subscribe button if you haven't already. So to start things off, let's break down Nikola's first quarter earnings report, where they gave us updates on their fuel cell commercialization plan, sales of their battery electric truck, as well as some new partnerships and orders announced from customers within North America. As you can see, Nikola sold around 31 Tre BEVs to dealers, and 33 of them were converted into retail sales where dealers were working with actual end users. Now, this is pretty interesting because this is the first time Nikola is creating a line item between dealer sales and retail sales, because obviously over the past few quarters, people have been very interested in understanding whether or not these trays are actually going into end users' hands. And although that is very much out of Nikola's control, it is still a very interesting figure to have a look at. On top of that, they announced around 12 customer orders totaling to 140 hydrogen fuel cell trucks, which is very interesting because this truck is expected to launch at the end of this year and potentially be the very first North American made hydrogen fuel cell truck. And this right here might actually be the number one reason why this European joint venture was cashed out by Nikola. You see, this manufacturing partnership between Iveco and Nikola started in 2019, where licenses for e-axles, batteries, electronics, and software would be shared between the two companies while they're trying to manufacture trucks in this new plant in Ulm, Germany. And this 50-50 partnership is now resulting in Iveco buying 100% of the entire stake, which is worth around $80 million. That means Nikola gets paid around $35 million for its part in the joint venture, and now Iveco is most likely going to control the way that trucks are manufactured in the Ulm, Germany facility. And unfortunately for me, from the research that I have done at least, it is difficult for me to understand what Iveco will now be doing with the European spec Tre BEVs and Tre FCEVs that most likely are already on the production line in Ulm, Germany. It's difficult to know whether or not Iveco will now rebrand Nikola's trucks to themselves, or whether or not Nikola will still be selling these trucks in Europe, except only being contract manufactured by Iveco's plant. And although there's a lot of speculation leaning towards Iveco now taking control of all the progress that Nikola has made, that is most likely not the real scenario. Most likely what Nikola is going to do is now contract manufacture their Tre BEVs in Europe, or potentially do a licensing agreement where Iveco can sell their Nikola trucks with a new brand. There's certainly a lot of developments that could occur in this space, and it's going to be really important to track how this will work because the European market is still a very important market for Nikola. It is where the cab-over design was originated, And in terms of hydrogen commercialization, Europe is way ahead North America. And guess what? We all know that Nikola definitely got quite a lot of benefit from this partnership that started in 2019 through a Series D investment. Nikola now has a Coolidge, Arizona facility. They have more people on their team to build and commercialize the Tre BEV. And so far, they produced hundreds of them to their facility and sold quite a bit of them to the North American market. So what exactly did Iveco, on the other hand, get from this partnership? Well, as it turns out, quite a lot more than many people think. You see, Iveco is a part of CNH Industrial, which is a parent company that owns 100% of Iveco stock. And as from the first quarter earnings report, Iveco has still reported year-over-year losses, meaning cash flow for the business is still in the negative. And in terms of Iveco's market share in the trucking space in Europe, they are consistently in the number 4 or number 5 space, being led by companies like DAF, Volvo, Mercedes, and even in some cases Renault. And as you can see today, Iveco only has a handful of vans and cabs on the market that are fully electric. And this is 3 years after the partnership with Nikola started in 2020. This means that Iveco is on average behind its competitors in the electrification space, although they've released some very efficient compressed natural gas trucks. As a result, what Iveco really needed is the ability to raise the right amount of money, the right team, and the right talent to be able to commercialize their own battery electric platform. And that is what Nikola allowed them to do. As a matter of fact, from an interview in 2021 by the Financial Times, the CEO of CNH Industrial said that he did not like Nikola Motors per se. He actually only worked with them because he knew it was going to be a mutually beneficial agreement. And then Iveco president Gerrit Marx said that Iveco wanted to outpace and outsmart its much larger rivals, which obviously they cannot outspend from a capital perspective. And in this case, Nikola allowed them to hire the right people and raise the right capital that Iveco themselves cannot attract. And that right there sums it up extremely well. It was all along Iveco's plan to start an Ulm, Germany factory that could manufacture electric trucks and allow Nikola to take the stand and the risk of being the first movers in that space. Nikola actually sold a lot of trucks that they build in Ulm, Germany as their first units in March of last year. And although right now they're not selling any of those trucks in North America and leaving their Germany trucks for Germany themselves, this is still a very well-run production facility. And so if Iveco does rebrand the Tre FCEV and BEV under the Iveco brand, then it would play very well in the hands of Iveco's electrification business. Because obviously, it's very difficult to raise capital for a loss-making company in Europe, and America is where innovation thrives quite the most. And as for Nikola now gets around $35 to $40 million handed in cash to their balance sheet. This obviously comes at a time when the company is running out of cash to cover a lot of its debts in the short term, which obviously is more of a problem with liquidity rather than actual execution. Nikola raises some cash, leaves its products on the market in Europe, and they now have the ability to freely navigate in the North American space with technology from Bosch, Iveco, and CNH Industrial. It's kind of like taking your trainer wheels off your bicycle. CNH actually valued Nikola at almost $3 billion in their Series D round with a $250 million investment 4 years ago. Stock for Nikola is now worth around $600 to $700 million, which really goes to show you the disparity between pre-pandemic valuations and what stocks are valued today. Gerrit Marx, as a matter of fact, did just leave the board of directors of Nikola in March, so it's very little surprise that this kind of new partnership between the two companies has been formed. The Nikola Tre BEV 4x2 is still on track to be produced at the end of this year, with the fuel cell at the first half of next year. It'll be interesting to see how this partnership evolves over the next few years, because clearly Nikola already has a good business running in North America. Meanwhile, Iveco will most likely take over Nikola's marketing and sales plans within the European continent. And in terms of finances, Nikola now has around $206 million of cash and cash equivalents, with $302 in liquidity and capital available. That leaves them with around $1.15 billion in total assets, with liabilities of around $612 million. This is certainly not the best balance sheet on the market, but given their gross margin improvements and their reduction in stock-based compensation, there is certainly a good light at the end of the tunnel for Nikola if they can go through this ongoing recession. It'll be important for the company to raise money, whether that be through convertible debts, private equity, or in some cases stock on the public markets, but we'll see how that plays out. What do you guys think? Did Nikola make the right call here, divesting its stake in the European joint venture? Let me know your thoughts down in the comment section below. As usual, thank you very much for watching, and I'll catch you guys in the next one. Take care.